Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again at euro currency. Actually, payrolls report, as you understand, has become a really important driving factor, especially when market stands in a period of the silence, when you do not have something really important and market turning to some choppy action, waiting for the big push. Once it get it, reaction usually stands relatively strong. So, as we warned on Friday, it would be better to not take the position for the report. It's just because there's a lot of risk, and with the choppy action here, although we said that overall price behavior looks bearish and more chance that market will proceed lower, but report could change the overall background, and it's just risky to deal with the data release. So our conclusion was to stay aside during the numbers release and see what will happen next. Because also we've got some contradictive patterns on Friday. If you remember, we've got here's bullish grabber, and that was the bearish grabber. So the tactics that we have discussed actually has worked nice if you have followed to it. So if you remember, we said you could try to use the double stop orders for an entry depending on the breakout of the grabber, whatever market will follow to. So for instance, we suggest that you could place here stop buy order and here stop sell. While market stands between them, nothing is going on with your position. You do not have the position. Once market is breaking one or other vital points of the grabber, you're stepping in. So sometimes it's useful. So when you do not have an idea on the direction, or you have the contradiction patterns, but you suggest that action should be strong, well, using of the stop orders makes sense to use. But if you follow to our major suggestion that it would be better to not take the position, don't be upset too much, because in the recent couple of sessions we should get additional chances to take the position, and I don't see actually no problems if you have missed this initial thrusting action. So currently, guys, we can't argue with the facts. It's just because we do not have the bearish context. Although sell-off here was strong and market hadn't taken the top of this candle yet, but we have erasing of the bearish grabber. We have bullish grabber that is still valid and it suggests taking out of this top. We have bullish trend on the daily chart. So it is difficult to even to consider any short position by far, and it means that we're watching only north, and currently we should take a look again on the same target that we discussed previously. So this is actually the same OP target of the 1420, makes an agreement with the 1440 area here, and it's very close to the daily overbought. So again, that will be the target cluster that market should try to reach within the couple of sessions. I'm talking about the couple of sessions just because, as you know, since Wednesday we will get the big statistics cluster release, which is the CPI, PPI, retail sales later, which actually brings the second part of the picture, current economic conditions. So last week we've got PMIs, multiple PMIs, and non-farm payrolls release. This time we get inflation and consumption. So that's quite enough to make conclusion of what has happened with the United States economy in December. So since releasing of these numbers brings some risk and could bring lots of volatility, we suggest that euro currency could try to use the momentum that has been set on Friday within the 2-3 first sessions of the coming week, and hopefully with this period it will be able to complete the OP target, because overall performance here was not actually bad. Well, in this weekly report we discuss in details whether this payrolls report could make impact on the Fed policy, whether it will change or not, and how really bad was recent numbers, despite that the nominal numbers were 2 times worse than expected. Well, currently market opinion suggests that it was not as bad to make Fed to turn out of its way. So we think that hardly it makes impact on the suggestion of the Fed will change the rate for the first time in March. Currently chances stand about the 80% that this will happen. And, recent reaction mostly should be treated as a short-term and psychological reaction on just a bit weaker numbers. If we'll get more or less positive retail sales and strong inflation, everything will return back to its own. So we should not overestimate the importance of this action. But still, it provides the background for trading only in upside direction by far. So currently it makes no sense to consider bearish positions. Besides, on the weekly chart, if you'll take a look at it, market was able to escape the bearish grabber, which was really chanced to happen this week. And also minor consolidation has been broken up, so it led market to climb a bit higher. So what particular trading stop we could consider? First of all, on the 4-hour time frame chart, potentially with a strong upward action, we could get the butterfly. And this butterfly has extensions. 127 is 1470, which agrees with all other targets that we have around the same area. That's great. So let's use this target as a potential destination point for this week. And besides, hardly market will be able to break the daily overbought just occasionally. So it's really big chance that this will become the sale for a current action for this week. The positive sign is that market was able to stay above the confidence, and currently actually the lows that we have here are becoming the invalidation point for a short-term context. Trend here stands bullish as well. So in the beginning of the week, we need to consider possible pullback. One of the reasons for this pullback will be relatively significant sell-off here, since some momentum here probably exists. But what's more important is that on the hourly chart we have multiple targets that have been achieved during the Friday session. So if we take a look, first of all, this local ABCD pattern has been completed. Also, market has completed this minor butterfly with the 127 extension. Although rally was relatively strong and it suggests that market should proceed higher into the 1618, 1384. But anyway, the strategy will remain the same. Our task here is trying to get the position as close to these lows as possible. Let's just save your money in the case of the failure or market starts dropping, so it will provide more or less reasonable risk for this trading. The ultimate and theoretical invalidation point stands below this area. But taking a look at the overall performance, normally the bullish market should not drop below 1310, 1320 area. For the bullish market, enough retracement to some confidence support, especially after this rally. So breaking of this major 618 support will tell you that something is going wrong. So market has to stay, if it's really bullish, it has to stay above this area. From that standpoint, you have additional option to consider, maybe to place stop not below this area, but maybe even either below this level or even below the confidence. Unfortunately, guys, it's currently difficult to say. It's just because we do not have any downside action yet. So once market will start to form it, maybe it will be some extension, ABCD pattern, we could tell with a more precision how deep this retracement will be. But at the first glance, it should be somewhere to 1320, 1330 area. So this is the primary area to consider for a position taking. Maybe even 1337. So be an area to keep an eye on. So retracement should not be too significant. That's two moments that we intend to keep an eye on. Besides dealing with this pattern, big pattern, which is guarded triple to sell, it suggests at least 30% reaction, which also tells about 1330, 1337 area. This market could show the pullback. We hope that later this 222 will shift to butterfly. This one. Actually, this is the same pattern, but it is just the final shape that we intend to see, but now it looks like here it's got this 222 sell. So that's approximately what we intend to keep an eye on in the beginning of the week. Let's see how it will turn, and let's update our trading plan as soon as we will get any progress with it.